January 28th, 2020. You gotta love it, guys, when market gives you an opportunity like today, a dead cat bounce on a Tuesday. The question of the day, how can this chart right here, guys, take a close look at this chart. How can this chart right here help you day trade today? That is the question of the day. I'm going to give you a very detailed answer. Here it is. BKNG chart from last week. Why would you be looking at a chart of BKNG from last week, Leonardo? Hey, because, guys, sometimes it's not about the ticker symbols, right? But really understand what does the chart really show you and how you can overlay it to some other tickers and symbols. It doesn't matter. You can do this with commodities, cryptos, whatever it is. Just focus on this. And this is a very easy chart. Anybody should be able to follow this. So this is what BKNG does last week. We predict a drop. It drops. We say shorted on a bounce. And so we particularly highlighted this red points. We actually highlighted this one before it even happened. We said, hey, when it gets here again, short it. Okay, so since then, this is what happens. And so this is a 10-day chart now, and these three dots right here correspond to these three dots right over here. Okay, notice the pre-existing conditions is very simple. You got a gap down, the stock drops, bounces one more time, drops, bounces again. So this represents like a great series of day trading opportunities and swing trading opportunities. So we overlay this on the 10-day chart, guys. This is what we get. This is where these three dots. So the third time was the last time that the stock tries to attempt to close this gap. It fails. And after that, you get another, that was 2015, 2020 level in BKNG. So since then, it drops like another $140 within what? Like 2 days. Okay, so it's important to understand it's going to do it the same thing one more time. Okay, it's going to drop, bounce. Anytime it bounces against that level like 1920, you want to come in and you want to buy puts here again. So it's very difficult to understand this simple thing if you are like a natural bull. So every time you're actually conditioned to buy this dips. So anytime it dips, you're like, oh, I want to buy the dip shit. But then you know, a lot of traders I talk to, they actually overstay their welcome. They don't know when to actually get the hell out. Okay, but right now, what you really want to focus, you want to get best results. Don't try to trade both sides of the equation. Don't try to be a bull and a bear. Just focus on shorting these bounces. So anytime this thing gets right here, you want to short it. How do we overlay this to trade in the markets today? It's very simple, guys. S&P chart over the last couple of days looks identical to that of the BKNG chart. So same dots, right? Same pre-existing condition. You got a gap down. Okay. Drop, bounce, drop, bounce, drop, bounce. Okay, so this point right here, when the market tries to bounce this morning, so pre-market is trading at 32.60. Okay, so potential when the market opens can go like a couple of points higher, sure. But use that area, 32.59 to 32.65, 69 area, right around here. That's your entry on the put side, okay? Don't be blinded by this bullish action. And of course, you know, it's easy to get conveyed by this bullish action when you listen to the news. So like, oh yeah, the drop is done. Everything is fine. You know, just buy the dip. As pointed in the last video, this is not the time to buy the damn dip. Okay, so just understand, focus on shorting these bounces. You're going to do very well. It's very easy. So the two possible outcomes you should know as far as today and tomorrow. So these are the probabilities that we're looking at, and this is like, guys, this is super simple. If you understand the 13 markets move formula, you should have no problem understanding how to actually trade this, when to pull the triggers, and so on. So two outcomes you should be aware of, and understand that there's plenty of times that I've stated, don't go all in. There's no reason to go all in. Most of the trading videos I show, guys, you can see I don't risk a ton of money. Most of these, they're $2,000, $3,000, $4,000 trades that end up being into 20, 30, 60, 100 grand sometimes. So understanding these key pivotal points is crucial. So what you want to do, basically, expect a reversal in the market. We got a dead cat bounce. Okay, so hopefully the market will go just a little bit higher after the open, and then it's going to reverse. So the highest probability is going to be a move too. Okay, so real easy. You wait for the reversal. Now the reversal sometimes could happen a little quicker, but basically you target this area. Sometimes you got to be a little patient because it's going to look like, hey, maybe we're getting some bullish activity, and then all of a sudden, boom, the market drops. Okay, so this is the reversal scenario A. Now sometimes, and the reason I'm bringing this up because we've been following this historic analog, right, which I'm going to pull up here in just a second one more time. But after this initial drop in the historic analog, you may not get like right away another substantial drop the next day or the following day. So the market could actually be going like in a smaller range, plus minus 10 points for a couple of days before another leg down is going to be created. So understanding this is critical as far as you trying to manage your positions. When you're managing your positions, what you really want to do, okay, so let's say we're expecting the reversal, and it does start to materialize, but then it kind of stalls out. So reversal lower, plan B variation is going to be, yeah, we're going to get a reversal. It's not going to be a huge reversal, kind of like in the plan A. And what it's going to do, it's going to stall out, and it's not going to fall a whole lot. And tomorrow morning on January 29th, you can get another small pop pre-market, followed by then, at that point, a substantial drop. So plan A, very simple. We get slight pop at the open, short it, and expect the reversal. Plan B, you should still expect the possibility that the market could still trend sideways a little bit, make another pop tomorrow before the drop. So understanding this is critical because you don't want to just all of a sudden, the moment you see the signs of the reversal after the market opens today, you don't just like, oh yeah, this is it, the market's going to crash right now, because you don't want to discount the probability it could go sideways for just a couple of days, which means tomorrow morning is going to be ultimate best entry point, okay, unless the market is automatically going to do this today. So basically understanding this, it helps you understand how to actually stair step and create your position. Let's say you pick out a stock like BKNG, you want to target the bounce, you want to buy some puts, but you don't want to buy a ton of them. You want to see how the market progresses, because tomorrow you may actually have a slightly better opportunity. Clearly, since we trade weekly options, they decay very fast on certain occasions, especially certain weeks. And what you want to do is you want to stair step in your position to avoid situations like this. Okay, and if you get really good at this, then the game becomes very, very simple, guys. So with that said, here's what we're looking at. This sequence did get more bearish after yesterday, so clearly we got a move 3 yesterday. As predicted, dead cat bounce presents great entry today. What you really want to focus on today, guys, is shorten the bounce at 32.59, 32.69 area. So there's definitely weak volume pre-market, which equals basically a bear. The market is in a bear mode, and the weak volume pre-market tells you that there is a high probability of a reversal. So target intraday bounces on lower volume, and that's your opportunity to actually come in and strike and take advantage over this silly market right now. So trade today is a move 2 or 11. Easy trades on earnings sides, guys, that we're going to break down just a little bit. FFIB, LMT, we're just going to watch WHR, but these two we want to short basically when the market opens. LRCX, AVGO, BKNG, basically S&P, futures, QQQ. We want to come in and short them on the bounce. And as pointed in the video yesterday, guys, wait to trade Amazon, Apple, Tesla after the earnings announcement. So the levels are quite simple, but it's important to understand them. So here's that gap that we just talked about for quite some time, breaking it down. So anytime basically the market gets to 32.60, just a few points, basically when it touches that level, that's your ideal point, like 32.69, which would coincide with this right here. So any area right here represents a great opportunity to buy puts, but it's going to look like actually the market is going higher. So everything inside of you is going to be like, oh man, I'm afraid to buy puts. The market is in the green, but that's exactly what you actually got to do in this type of market condition. And another thing what we discussed yesterday, after hours today, we could get a rather substantial move. So it could be after hours today, it could be after hours tomorrow. And again, that is why it makes sense to actually keep your positions overnight. Again, you don't want to go with the entire account keeping these positions overnight. But you do want to have some positions in the event of a bigger gap down, which could actually take us all the way down to 31.81. So that potentially could happen today after the market closes on the 28th. It could happen tomorrow after the market closes on the 29th. Now, clearly, when we're talking about after-market action, that would also include the pre-market hours. So if the drop, the gap down, could potentially start, it could actually accelerate and actually create a bigger gap down in the pre-market hours of trading. So VIX officially did break out. I do have it highlighted in the red. It should be in the green here. So 1902, 1742, 1822 range. Guys, officially we're in the mode where VIX have broken the tunnel. And it's working. It's going to keep working its way towards the 2025 range. Important to understand that as far as when it comes to VIX, you want to buy it on a pullback. So since it works in the opposite direction of the market, you want to buy the pullbacks in the VIX. You want to buy calls in the VIX. You want to buy puts and pretty much everything else, okay? But as far as the historic analog, here's the 3 dots. They're not dots, but here's the 3 candles right here. that point that based on our historic analog, we could be going sideways. So this huge leg lower, based on our historic analog, may not actually take place till, let's say, tomorrow after hours or Thursday. So, but know that it's coming like here in the next few days. So you do want to start buying some puts on the bounces. You don't want to just, you want to have some cash ready on the sidelines in case the market does another bounce, let's say tomorrow pre-market, right? You want to, that's your opportunity to strike. That's your opportunity to buy puts. Okay, guys, it's official. It's the week 3 of earnings. Ton of companies are announcing stuff. Couple of things I want you to focus on. If we see the institutional behavior coming in, taking profits in companies like Apple, and after the investor day at Goldman Sachs tomorrow, very important stuff. That's why I put it here on the schedule, guys. Goldman Sachs got an investor day today. If after investors day meeting, Goldman Sachs is going to sell off, the entire banking sector is going to sell off. We're positioning rather bearish going to the Apple earnings announcement. We're not saying the earnings announcement is not going to be good. It probably is, but it's going to sell off anyways. So, in other words, we're expecting Apple to sell off on good news as profit taking comes in. We're expecting potentially Goldman Sachs and the banking sector to sell off after this investment day conference tomorrow at Goldman Sachs. If these two things take place, there's no way the market can go higher. So, basically, besides some of the facts why we're bearish right now, we're going to have some extra reasons to get bearish here. Therefore, as I'm showing some extra charts, when it comes to the slope of the drop, things could get rather ugly and rather quick. As far as a couple of easy trades you can take today based off the earnings, so FF5E, F5 Networks announced earnings. That is a cloud play, and it's likely to sell off. So right now, pre-market's trading so far at 127.6. It potentially could basically open right here in the range of 127 to 130. If it does open right around here, guys, short it, just buy puts right at the open. Expect the stock to make an easy $7 to $8 drop. That should be enough for a few 100% return on this trade. Lockheed Martin LMT went about 440, 430 puts right at the open. The stock is actually gapping up higher. So you should be able to notice more situations like this. Okay, when stock is going to gap up higher on what appears to be good news, but then it's going to sell off. Okay, it's going to feel weird if you're new. You're like maybe sitting there thinking, why the hell is this thing selling off? The earnings are good. Everything is good. Why is it going down? So based on our 13 market moves, guys, this is an ideal move to formation. So LMT is likely to sell off. Currently, pre-market trades of 437. Expect an easy $10 drop. All the way possibly low 20s, like 420, 425 area. So basically you want to get in at the market open right here at about 438. You want to collect your profits about 420, 425 area. Quick and easy trade. Probably take you, a quick half an hour to collect some gains on that one. Now, as far as the market moves, guys, yesterday was a solid move 3. And it did have a characteristic of an 11 behavior. The reason that is important, that it had a characteristic of an 11 behavior, it keeps telling you, the 13 market move formula keeps telling us that this is still the top. We have not gone down by as much as we should, so the further drop is definitely coming. This is how the move 3 looks on the charts, guys. You got a gap down followed by a pyramid. Nice and simple, beautiful move. 2-day sequence is 2-3. Clearly, it's a rather bearish sequence. The last time we've had a serious combination of 2s and 3s was in December of 2018 when the markets were crashing. And when you have a solid combination of 2s and 3s in a rise and VIX environment, basically that tells you that further drops are likely near term. So that's exactly what we want to focus. We want to short every possible bounce that's greater than a weak volume. We want to buy puts and collect the gains when stuff goes down. Okay, so here's the 2-3 scenario. Basically, you have 2, bounce, drop, bounce, drop, bounce, drop, gap, and another bounce, drop, bounce, drop, bounce, drop. That's likely to increase in the magnitude going into the last couple of days of the week, like Thursday, Friday. So that's where things can get really, really interesting. 5-day sequence is 11, 6, 4, 2, 3. Very, very bearish sequence from the standpoint that these are your topping moves. These are your full mode distribution moves. Stuff could be initially moving higher, but things move higher in low volume. They sell off on much greater volume, and it's down to much greater magnitude than you would see on a typical pullback. So with that said, what we want to look at this on a 5-day chart is the significance of the slopes. The slopes are still rather sharp. So when you see quick slopes right after you just set a triple top formation on a 5-day, 15-minute chart, basically the sharpness of the slope, the closer they are to the perpendicular angle, the likelihood the market is to continue reversing and going lower. So this is a very important sign that you want to pay attention to when you're looking at multiple time frame charts. So next market move for today, guys, we are definitely looking at a move 2. So we basically would end up with a combination of market moves 2, 3, 2 over the last couple of days, which point to actually a gap down. So expect there is definitely a high probability of a gap down, either aftermarket, pre-market, or basically aftermarket tomorrow. We can easily be going for a gap down type situation. Again, that tells you how you should trade. That tells you if you should be keeping your positions overnight or not. VIX conditions are rather bullish for the VIX, rather bearish for the market. Again, we are officially out of that trading range where the VIX has been stuck for a couple of months, and now it's broken above that critical level of 15.9, which we explained thoroughly in that prior couple of videos. Okay, what you want to do is focus on buying VIX calls on a pullback, so the chart should make it very simple for you to do so. Basically, if VIX pulls back to 15.9 or 16.3, you want to pull the trigger. Now, the question is, may never get there. So far, pre-market, it's trading at 16.93. So use that red line. It's basically this is sort of the new trading tunnel for the VIX between this 15.9 level and 19. If it breaks above 19, we can easily see it at 21, 25 level. If it doesn't, you basically want to use a simple strategy of buying VIX calls when it gets closer to 16. You want to sell VIX calls when it gets closer to 19, unless you notice that VIX is definitely taking this level out to the upside. So we do think there is a high probability that VIX could actually break above this yellow line at this point, which represents the upper trading part of the tunnel for the VIX. And if it breaks above, hey, the sky is the limit for the VIX. And guys, just like in the video yesterday, I want to repeat it one more time. You want to focus on the entries. In this type of market, the way you make your money is by getting the entries right. So if you're buying puts when shit falls, you're not going to make the money. If you're buying puts when stuff goes higher, you will. So just focus on exactly doing that, okay? Focus on trading the move 2 today. Focus on trading potential move 3 tomorrow, guys. Trade like a rockstar. And if you haven't taken all the courses, including Trade Like a Rockstar course, make sure you click the link below, find out, take action, and basically just get it fucking done. Let's go. Let's do this.